breaks six-day losing run, ends 180 points higher. Top gainers include auto, bank, power and realty stocks. Nifty ends above 15,800. Broader markets outperform. Shares of LIC will be listed in stock markets tomorrow and will be open for trading. Analysts, however, fear the listing may happen at a discount. That's below the IPO price of 949 rupees. The grey market discount on the share is currently 20 rupees, meaning the share could list at 929. Government is set on plugging all profit routes for crypto investors. Top government officials tell Business Today TV that plans are underway to tax trading in overseas exchanges as well. The government had imposed income tax on crypto profits and TDS on all transactions effective 1st April this year. Government has decided to put on hold the sale of Pawan Hans to Star 9 Mobility Private Limited. The decision comes after concerns were raised over one of the majority stakeholders of Star 9 Mobility. Govt Adani, catapulted as the second biggest cement player in India overnight, will add a value of more than 1 lakh crore rupees to his corporate empire. In a special report, we pit him against his Gujarati businessman brother, Mukesh Ambani. A fact-finding committee of the aviation regulator DGCA has found that the staff of Indigo inappropriately handled passengers, not allowing a specially abled child to board an aircraft in Ranchi. A show-cause notice has been issued to Indigo. Acknowledging the DGCA notice, the airline says that they will respond in due course. Summer holiday travel plans in jeopardy as airlines set to hike fares again. Aviation fuel prices increased by 5% to an all-time high, 10th price hike this year. A big respite for investors after falling for a week. Markets today ended a choppy session in the green. Sensex closing 180 points up to shut shop some points shy of 50,000, and Nifty gained about 60 points and ended above 15,800. So just short of 53 and just above 15,800. After declining for days, broader markets today outperformed the benchmarks. Sectorally, PSU banks led the rally while IT stocks took a hit. Eicher Motors, Apollo Hospitals, NTPC, UPL and SBI, the top blue chip gainers today. On the downside, Ultratech Cement, Shree Cement, Asian Paints, ITC and Divi's Labs among the top laggards. Our global business editor, Udayan Mukherjee, joining us now for his take on all the ongoings, whether it's rate hikes, inflation fears, the currency nosediving. Udayan, it's all been happening, but markets seem to be holding forward, at least for today.
Yeah, but I think it's very, very volatile for the market right now, but both globally and locally. But I think we are now flirting with a very important level on the Nifty, which is around that 15,700 mark, which was the previous low for the year. And I think from a technical perspective, a lot of people are watching that very closely, whether we sort of attempt a kind of a pullback, keeping that low in place, or we violate that and go down another 4-5% from here. So I think the next few days will be quite crucial, and I think the LIC listing will also play some role in sentiment in determining which of the two options or which of the two paths the market takes from here. But I think we are not out of the woods. Even if the market were to put in a temporary bottom here and rally, but which is not inconceivable, particularly because the global markets also look terribly oversold, the Nasdaq mostly. But so a rally is very possible, a pullback or a relief rally. But I think we are not quite out of the woods because of the very reasons that you mentioned. I think the RBI has clearly signaled aggression on the rate hike front, and part of that has been priced in, of course. But I think basically all investors are coming around to the view that growth will slow down now over the next few quarters as interest rates go higher, and that will be the route to taming this inflation beast. So global growth will falter, locally growth will come down, and that inevitably affects earnings growth as well. So we might start to see the beginning of the earnings drawdowns over the next couple of quarters as well. So things are not stacked up well for the market. I don't know how much downside there is, but hand on heart, I would say that the market probably still has downside from here. I don't know whether it's 15,000 or it's lower, but maybe a 5 to 10% kind of downside from here cannot be ruled out. But it's volatile, and we can't predict for sure whether the route to the lower level that I'm anticipating is a relief rally first and then another drawdown, or the market continues to take out the previous low for the year and drifts to even lower levels. As I said, global markets, the currency, and of course the LIC listing all will play their part in determining that. With me is our special market guest for today, Sridhar Sivaram, a veteran investor over many, many decades and investment director of Inam Holdings. Sridhar, it's great to have you on the show today. Let me ask you about the market first, because the indices have been quite resilient. They've not corrected more than 10-12%, but underneath, the mid-cap and small-cap damage has been far more extensive, 25-30% in many cases. How would you classify this market? Would you call it a stealth bear market even, or is it a market which is just consolidating the gains made since the start of the 2020 rally?
Yeah, so I wouldn't yet call this a bear market, but there is a steady correction in progress, which is in line with what is happening with other global markets. I think some of the large caps have held very well, and we are seeing some sort of a rotation. So if you see, there have been correction even in the large cap space, and there have been other stocks which have been underperforming in the past, which have been holding up well, which is why we see the Nifty or the Sensex still, plus minus 3-4% over the last 3-4 months. So I would categorize that this is a sort of consolidation that we are seeing right now. But our own view is that 22 is a challenging year because of the multiple headwinds that we are seeing right now and what we are going to see ahead. So it's a market which one has to tread very carefully for the current year.
So these multiple headwinds that you're talking about, Sridhar, do you think they can lead to more absolute downside to this market? Or do you think we will get away with this kind of sector rotation and holding in a broad kind of a range till the year is out? Are you expecting even deeper volatility?
I think volatility is surely going to be deep. Question is whether we see a deeper correction in the absolute index. That's very difficult to predict. But what we are seeing is that wherever we are seeing high growth, high multiples, and even the slightest amount of disappointment, those stocks are getting corrected very sharply. I would say there is a shift between value and growth. So we are seeing value emerging after many years in India, where value stocks are coming into the front. And growth stocks are being questioned, especially the hefty growth stocks with hefty multiples, growth at any price. Those sort of stocks, the market is now questioning the wisdom of some of the pricing there. So I think that's what we are seeing right now. If suppose there is a large global correction because of Fed tightening or something else, will our markets correct a bit more sharply? It's possible. I think it's very difficult to predict those events. But as I mentioned earlier, that our own view is that protect capital is the mantra for 2022. And we would look at opportunities to buy into stocks only if we find the price really compelling.
So let me ask you about this growth at any price kind of stocks, Sridhar, because they did quite well through the difficult periods a few years ago. But this year, notably, they're underperforming. In the past, we've seen many of these expensive stocks go through very long periods where they did not return anything. The Hindustan Levers of the world, went through 7-8 years, even 10 years of practically no returns. Do you see that kind of situation happening to the Asian Paints or the Bajaj Finances of the world, which may have some growth, but P multiples are in absolute terms very expensive? Can they underperform for very long periods of time?
Yeah, so I'll not get into the specifics and specific stocks, but in general, markets are slaves of earnings. So as long as companies can deliver strong earnings, and if they are, say, trading at very high multiples, then I would say they need to deliver north of 20% earnings to sustain the high multiples. If they are not able to, then the market's wisdom to give such high multiple to some of these companies will come under question. I think which is what we are seeing right now, that some of these companies are continuing to deliver on high growth. So they continue to stay in that elevated multiples. I don't know for how long, But for now, they continue to stay. Where we are seeing disappointments, as you mentioned in the past, that this has been a cycle where we've seen in the past also that large staple companies have underperformed for 10 years. We've seen that with even financials. Many of them have underperformed for a period. We are seeing even right now when some of the financials are underperforming. Staples in the last 3-4 years have actually underperformed. And they are again very high P multiple companies. Some of the new age companies which have got listed had a lot of fanfare as they got listed. But now we are seeing sanity come back. Only time will tell whether these prices are right or they need to correct more. So I think it's a phase where market is realizing that there are headwinds and we need earnings support for stocks to stay on. And we are seeing churning in the portfolio. And I think this is a healthy signs that from a market standpoint that some of these corrections are happening, allows people to reflect on the portfolio that they're currently holding.
You can catch the full interview on businesstoday.in as well as our YouTube channel. LIC all set to make its Dalal Street debut tomorrow. The big event could, however, turn sour for millions of Indians who have invested in the country's biggest public issue. According to analysts, LIC shares are likely to list at a slight discount, a huge disappointment for those hoping to make listing day profits. According to market watchers, shares of LIC are trading in the grey market at a discount of 20 rupees. Analysts, however, believe the issue will be good for investors in the long run. LIC's offer was oversubscribed by nearly 3 times, mostly lapped up by retail and institutional buyers, but foreign investor participation remained muted. After record high levels of IPO activity in 2021, volatile market conditions have resulted in a significant slowdown during the first quarter of 2022. According to EY, 16 new IPOs were introduced in the Indian market compared to 23 IPOs during the same period last year, highlighting a decline of 60% in funding raised and a decline of 82% in the number of deals. The IPO momentum of a blockbuster 2021 has not carried over to this year so far, and the report attributes the reversal to a range of issues, including geopolitical tensions, stock market volatility, the impact of inflation, and potential interest rate hikes. However, the report expects to have a strong pipeline for IPOs in Q2 this year, as 20 companies have filed their DRHPs in Q1 of 2022. On a broader note, EY findings suggest witnessing a robust activity in the private market, with more than 10 companies gaining unicorn status in Q1. We take a very quick break. When we come back, more on Govt Adani and his latest acquisition.
Nous aurons demain une paix à bâtir. Ne l'oublions jamais. Et je le rappelais tout à l'heure. Nous aurons à le faire avec autour de la table et l'Ukraine et la Russie. Les termes de la discussion et de la négociation seront fixés par l'Ukraine et la Russie. Mais ça ne se fera ni dans la négation ni dans l'exclusion de l'un l'autre, ni même dans l'humiliation.
Welcome back. Govt Adani has cemented a place for himself in the mega bucks construction industry by buying ACC and Ambuja Cement for a whopping $10.5 billion. In what is the biggest deal by Adani as well as in the Indian construction space, Adani Group will purchase the two companies from Europe-based Holcim, which is exiting the Indian market. So what does becoming the second biggest player in the cement market mean for Adani? Where does this place him against the ambitions of fellow Gujarati Mukesh Ambani? My colleague Sakshi Batra takes a look.
The $10.5 billion Holcim deal is a big win for Gautam Adani, as the acquisition is the biggest deal for Adani Group and has made it India's second largest cement major in India after Ultratech Cement. Now, Adani has, in the last couple of years, really diversified beyond its core businesses as well, of operating ports, power plants and coal mines into now airports, on data centers and also clean energy. The cement foray actually syncs very well with its overall infrastructure portfolio too. Now let's take a look at these 7 Adani companies that are listed on the stock markets right now. Let's start with Adani Enterprises, which is India's biggest coal trader as well as the biggest private airport operator as well. Now, Adani Ports is also India's biggest private port operator as well. Now, when you talk about the other businesses like Adani Green Energy, it is one of the world's largest solar power developers too. Also, Adani Transmission is the largest private sector transmission and distribution company in the country as we speak. Also, Adani Total Gas, which operates the largest city gas distribution business in India. That's another business that's been doing very well for the company. Adani Power is the largest private thermal power producer in India as well. And the recently listed Adani Wilmar, the country's biggest edible oils brand too. Now together, if you count these 7 companies formed the group, the market cap is now at 14.3 lakh crore rupees. Now, the acquisition of assets of Ambuja Cements and ACC may actually lead to an increase of further Adani Group's market capitalization by over 1 lakh crore rupees, as per most of the market experts that we have spoken to, when the deal gets done, which is expected somewhere in the second half of 2022. Now, when you compare this to Reliance Industries, which actually houses a number of businesses as well, including the likes of oil to chemicals business, including refinery, petrochemicals business too, oil and gas business, which is into production and exploration of crude oil and natural gas, the digital and telecom business under Reliance Jio, and the retail business under Reliance Retail as well. Mukesh Ambani is further now stepping on the gas on renewable energy space and also the e-commerce space now with the acquisitions coming in. Altogether, the market cap of Reliance Industries currently stands at 16.4 lakh crore rupees. Gautam Adani and Mukesh Ambani, interestingly, are the two top richest men in the country, also hold the world's richest ranks in terms of world rankings as well. And when you talk about the kind of net worth that they command at this point in time, billionaire Gautam Adani's recent acquisitions and the stellar performance of the listed companies have together provided a big push to his overall net worth, which currently stands at $99.5 billion and is in fact higher than Mukesh Ambani's wealth, which is at $88.6 billion.
India's decision to restrict exports of wheat has shocked the global market. International wheat prices surged to a new record high earlier today as the European market opened, touching $453 per ton. Prices have been trending upwards since Russia's invasion of Ukraine 3 months ago. Both countries are major exporters of wheat. India, which had earlier promised to make up for the shortfall, announced the restrictions on Saturday, given the heat wave, which cut harvest prospects and sent prices in the domestic market soaring. Shipments will be allowed where irrevocable letters of credit have been issued before the notification date of 13th May. Meanwhile, reports coming in suggest that the government has cancelled the trade delegations it was sending abroad to explore possibilities of wheat export. Let's hear more on this from Chetan Bhutani.
The government of India last week had announced the visit of Indian delegation to 9 countries to boost exports and, of course, to give further lift to wheat exports. But within 24 hours, that is on May 13th, the government of India had ordered a full complete ban on export of wheat Now, sources in the government have told Business Today TV exclusively that the visit of these delegations to 9 countries has been postponed or deferred until the situation improves. However, the Commerce Ministry had proposed to send delegations to Morocco, Tunisia, Indonesia, Philippines, Thailand, Turkey, Algeria, and Lebanon. However, sources are pointing out that this postponement of the delegation visit is only temporary, and once the export curbs ease and the situation in the country, the wheat situation in the country subsequently improves, the plan will be back on the table, and a new plan will be made, a fresh outreach program. However, domestic prices in India has been falling about 5% now. The prices start to cool off about 100 to 125 rupees per quintal in the mandi prices have been cooled off. So remember, also in the light, on Sunday, the government announced that the deadline for wheat procurement by states have been extended to May 31st, giving a further relief to the farmers. However, the government is planning every step very carefully and doing everything it can in its capability to provide further relief to consumers as well as farmers.
All right, Chetan, thanks so much for joining us with that story. China has meanwhile defended India over the wheat export ban. An article in the Chinese state mouthpiece, Global Times, defended India's decision and asked G7 nations that if they're so quick to criticize India, why won't they themselves hike exports and stabilize the food market supply? The report said that while India is the second largest wheat producer, it accounts for only a small part of global wheat exports. It sounded out US, Canada, the EU and Australia as some of the major wheat exporters. China said the West just wants to shift the blame to developing economies, including India. Industry body CII gets a new president in Sanjeev Bajaj today. Addressing the media for the first time in his new role, the top honcho of Bajaj Finance expressed apprehension that the era of low interest rates was over and that the industry could expect rates to continue moving up in the coming year. He explained how the demand and supply side factors affect inflation. Listen in.
One, as we are seeing, is demand side impact. Food prices and all are going up. RBI has already started the cycle of taking interest rates up, and we should expect interest rates to continue moving up in the coming year. Then there is also the supply side, which you can't control directly. A lot of it is driven by oil, some of the supply chain disruptions that continue to happen. All this put together, I do believe that we are now in an era of higher interest rates. This will help us in bringing down inflation, at least part of that going forward.
The centre's plan to sell its stake in public sector helicopter service provider Pavan Hans have hit an air pocket. In a major turn of events sure to leave many red-faced, the government has been forced to put on hold the sale of Pavan Hans to Star 9 Mobility. The sale had been green-lighted by the Union Cabinet about a fortnight ago. While the government was selling 51% stake in the company, ONGC was selling the balance 49%. However, with the Kolkata branch of NCLT sanctioning Almas Global, one of the 3 companies comprising Star 9 Mobility, for failing to pay for a company after winning its bid in the bankruptcy process. Top sources involved in the divestment process have told Business Today TV that the government will look at the NCLT order. Trading in crypto is all set to take a hit, with the government planning a larger tax buy from your profits. Highly placed sources have told Business Today TV that the government is in the final stages of considering a reverse charge on Indians investing in virtual digital assets on overseas crypto platforms. Importantly, investors had been moving to overseas exchanges after the government imposed a 30% tax on income from crypto trade. For more information, let's go to our principal correspondent, Karishma Sudani.
Well, absolutely right. We are picking up from our sources that Centre is in the process of considering imposing a reverse charge on transactions related to cryptocurrency. We are being told that the government is finalizing a provision on this. Sources also tell us that the legality of imposing tax on cryptocurrency is included under Schedule 2 of Goods and Services Act 2017, which classifies activities that could be treated as service or activities that could be treated as goods. Now, reverse charge is not a new concept. In fact, it's applicable when a registered consumer or a registered individual takes some kind of service from an unregistered party, in that case the registered individual who is an Indian residing in India will have to pay some kind of tax on the commission value to the central government. Now this could be a decision on this could be taken at the GST Council if the government is going to propose this. The decisions are still with the Fitment and Law Committee, who are deliberating on this matter, and likely if the council convenes in the end of this month, then a decision on taxation on cryptocurrency could also come through.
All right, Karishma, thanks so much for joining us with that. That's all we have time for on the show tonight. Thanks so much for watching.
On a daily basis, thousands of oil spills occur worldwide in the oceans, causing oil pollution. This oil pollution in the oceans can have a disastrous effect on marine life. Most people don't realize how serious the problem is until there's a major incident at sea, such as a tanker spill or an oil rig explosion. Oil slicks have the potential to kill seabirds and marine animals such as seals as they drift towards the coast. Although only 10% of global marine oil population is caused by spills of this nature, the majority is generated by everyday maritime traffic such as illegal dumping and tank cleaning, as well as onshore industrial activities. The environmental impact varies depending on location. Deep sea spills are typically smarter and easier to clean up. The oil sinks as it becomes denser, is broken down and destroyed by bacteria. Oil slicks on a rocky coast or exposed beach can have a significant impact on marine ecosystems, and they can take up to a year for wave action to clear away. This oil pollution is also extremely harmful to coral reefs. Coral regeneration can take up to 10 years and is often irreversible. And pollution in mangroves or on sandbanks can cause long-term damage that lasts more than 20 years.
Presented by eBix Cash. हर खुशी के लिए काफी है.